Okay, folks, welcome to Market Wrap for the 25th. A huge day today. We kind of expected this, right? We spoke about this yesterday on the weekend commentary. If new members, please go check the members vlog and check out last night's commentary with regard to our expectations for the coming week. And I think we were on point for the most part. Let's kick things off tonight with... let's go with our trades, and then we'll talk about the markets. All right, so we'll kick things off first with Cal-Maine Foods. We bought Cal-Maine Foods quite some time ago, right here on this breakout back in May. I think it was May the 29th to be specific, at 47.73, which was just off the highs of the day of that session, and we realized profits today. So a nice trade. Do I think that we're going to go ahead higher here? I think we could quite possibly. When we sold out, we were looking weak, but we did rally back off the lows of the day. This is a thinly traded stock. So I didn't want to take a risk of getting hit hard, as these shares have a tendency to do when they do go down. So I wanted to move to the sidelines, let this market sort itself out. Then we could look to get back in. Let's see who are going to be the new leaders. It could be the Cal-Maine Foods of the world, the agriculture names. For all I know, I doubt it though, because of the trade tensions with China and the Europeans. Now, EDC, we booked profits in quickly on today because while yes, we did rally off the lows of the session, we didn't close positive. So I think that we could retest lows here. If we do shoot up higher tomorrow, I wouldn't be the least bit surprised. I would expect resistance at $95 per share. I think ultimately we're going to get a pullback and a double bottom retest. So there'll be another opportunity to get long of EDC. We realized a profit. I didn't want to carry the position overnight. The dollar looked as if it might pop higher. And usually when the dollar rallies, EDC declines. And I still don't like RSI. It looks as though it is still trying to find a bottom here. Volume was very high, but you did have some buyers. So EDC will come back to revisit. I was looking at a 2-hour chart. You can see that we're oversold here. It was a dead cat bounce. I'm not going to be the least bit surprised to see a rollover or a pop higher. Either way, we scalped a couple of bucks off the trade. We're sitting in cash, and right now, cash is king. All right, speaking of the dollar pulled back today and is bumping up to the 20-period moving average, which should act as support. Volume on the dollar dropped off dramatically today to the downside. So we should get a pop on the dollar. We're still very extended here on ADX. I think that we're seeing a downtrend in ADX green and the signal line, and an uptrend in red. That's a negative. We're rolling over on MACD. Ultimate Oscillator, same deal here. Now, what was bullish for the dollar this entire rally higher was the trade tensions. But even with today's news, it didn't help. A new weekly low, but we're not ready to call the dollar out yet. We have a lot of resistance up here. The 10-year yield made a new weekly low, closed down below the 20-period moving average. Both lines on Stokes are now below 50, folks. And we know that rallies tend to fade when that occurs. Tips, they rallied today. This is a daily chart. They did close off the highs of the day. They got a bit ahead of themselves. Volume was very good. We don't like these wicks, these shadows, these topping tails. It's a sign of sellers above. So expect probably a consolidation on the tips. But if they continue higher, that's a fear of inflation. These are Treasury inflation protected securities. The operative words being inflation protection. The VIX ripped higher today, closed off the highs of the day. Came very close to a 20 handle. The transports, negative on the year now. Now, remember over the weekend, we spoke about the weekly chart and a possible double top. Now, if we close out the week where we close today or lower, it's not going to be pretty in the coming weeks for this market. And if we break down below and close below the 10,000 level, look out below for the Dow Transports, in all probability, the S&P 500. Dow Jones daily chart, close down below support, and we close down below the 200 period moving average. We haven't done that in a very long time. We didn't even close down below that level back during the February to April sell-off. So a significant event today with the Dow Jones closing down below the 200-day moving average. Bad stuff. S&P 500, not as bad as the Dow, but it closed down below critical support. RSI now making lower lows. Volume was high today. Both lines on Stokes down below the 50 level, folks. So we know that if we get a rally, it's probably going to fade. The IWM broke down, and it did so on massive volume. So the small caps did play a leadership role in the past several months. They're still up for the year, but they are now under a tremendous amount of pressure, as noted by these volume bars. This is institutional distribution. Gold. Gold attempted to rally, but it failed. It looks like we're going to put in a double bottom setup here on the stochastics. Down volume was very light, so I wouldn't be a buyer of gold yet. Now, Nugget, for its part, flashed a bearish key reversal day today. Volume was light. The only reason why I kept it was because gold intraday, as a matter of fact, let me bring it up. Gold continued to put in higher lows and threatened to break out on price and an RSI, but inevitably it gave up those gains. So I'm willing to give it a little bit of rope to see whether or not it pops. It should pop with the weak US dollar. And once we clear, if we clear 1,275, you should see a short covering rally, because then we go from putting in lower highs and lower lows to now putting in higher lows and then higher highs. That'll cause a short squeeze. And the same thing holds true for NUGT. We're looking for higher lows. So once we get through 2450, you should see a short covering rally on the gold mining names. USLV daily chart, it reversed today. It gave up the gains from Friday, that's for sure, as did NUGT. Gave up most of those gains. But it's holding support here. We're going to roll over here on Stokes. Possible double bottom setup. EYES took it on the chin today. Held the 200 period moving average. We'll hold on to this longer term position for new members. Everything just got taken to the woodshed today. So I don't want to react to the market when people are simply just selling everything. I don't want to react when things should be going up and they're not, because the market is reacting on emotion. I want to hold firm. So what we're going to look for is to open up short positions here. I spoke about the semiconductor sector yesterday on the week ahead commentary, and I mentioned that they were looking weak and that they were breaking down. Sure enough, they did break down today, and the SOXS ripped through the ceiling. So what we're looking for is a pullback here and an entry point that is attractive from a risk-reward perspective. Look at the volume here. We haven't seen volume like this in a long time. So massive accumulation of the SOXS. This is a leveraged ETF, folks, not for the faint of heart if you don't like volatility. The SPXS. Now, it broke out today. So we're looking for a pullback and a retest. I think we're going to get a rally in this market. But in all probability, that rally is going to fail. So it's on the pullback and a retest of this breakout point of the SPXS that will look to open up a long position. TCP Pipeline Partners pulled back today. How did Energy do? Let's pull that up. Energy took it on the chin. So much for the bullish price action from last week. Not much was spared today in terms of selling. All right, Cure. We're going to put a stop here. We broke down today. I may even close out the trade tomorrow morning. We broke down below the lower band of support. I'm not looking to be a hero here. So the shares did rally back off the lows of the day. Volume was about average. Let's check out the 2-hour chart, see how we might open up. All right, a good close. A nice rally into the close. Let's use a stop right below 46.20 on Cure. All right, let's talk watch stocks. Goose. It was only a few days. It was only a few days ago. I said, you know what? It's overbought. It's probably going to pull back. It's a good short. A couple of you profited from that call. Good for you. Now we're looking to buy it. And it's not a play on it breaking out to new all-time highs. Frankly, I think this market is probably done for a while. So I think that we're probably going to get a rally here in the coming day or so. And what I'll be looking for is a breakout on a 2-hour chart as noted here. So if we get a pullback and a retest of lows, 55.77, I may nibble. But I want to add more aggressively on a rally up and through $59 per share and a close there. Then we will try to capture as much of this upside move towards a retest of 68.75 as possible. Will it get through it? I don't know. It all depends upon how the market holds up. So I wouldn't bet on it. So we'll look to scalp a couple of points. I'll be satisfied with that. We move to the sidelines and we live to play another day. So that's the game plan with Goose. Let's go over a couple of other trades. LABU, they were clubbed today, down over 8%. Now, the daily chart is a bit deceiving. So let's take a look at the weekly chart. So when it comes to the trade wars, we need to keep the victims of who suffers in a trade war in mind. The manufacturers, of course, the farmers, of course, healthcare, biotech, I don't think as much. Those are necessities. So what we're looking for here is hopefully a continuation pullback and a retest of support right here at, let's call it 92.88. And if it holds that support level, we can buy there with a stop right below it and then look to enjoy the next leg up higher. I don't think that LABU is done going up. We've been in an uptrend since 2016, and that uptrend is still intact. So more to come on LABU. All right, let's do a quick look at our watch stocks going into the week. DPZ, Domino's Pizza. I have a rule about shorting extreme overbought stocks and buying extreme oversold stocks, and that is I try to wait until the final hour of trade, because far too often when I see early morning sell-offs on stocks that are extremely overbought, they rally back and you get burned by the end of the day. So while that wasn't the case today with DPZ, I did not enjoy this move lower. For those of you that did, congratulations. I think that we'll probably pull back to test the rising 20-period moving average. So I think that we're going to see a floor here on DPZ at between 270 and 262. We did rally off the lows of the session. I don't think that we're done going down yet. Is the stock going to zero? No. It will rally back in the coming days. We'll look to buy it, much as what we're going to do with GOOS. We'll do the same with Domino's Pizza. We'll set up our 2-hour chart. We'll look for that breakout and a continuation move higher in an effort to try to retake or take out 293.81. Will it do so? I don't know. Maybe, but we're pretty confident that the shares will not just drop down. We will get an attempted rally back. We'll look for that lower high. We'll book profits. If we do get a lower high and we break down to new lower lows, then we'll look to short Domino's. Not yet, though. Easy money's been made. Kroger. All right, so this is no longer really attractive to me unless, of course, we get up to 31.15. Why? It's because I mentioned yesterday that it could trade sideways and the oversold condition would be alleviated relative to the third standard deviation Bollinger Band in red and the RSI. Now, while they're still pretty extended, I still think that there's too much risk relative to reward to go shorting this stock right now. And on a daily basis, actually on a 4-hour basis, here's your 4-hour chart. We spent most of the day consolidating within a triangle formation. I think we're breaking out here. Now, would I consider shorting on a break of this lower band of support? Sure. But I think we're going to move higher. So we'll revisit it right here. at 31.15 per share. And if we have RSI that's well above 80, then we'll look to possibly, just possibly, short the shares. Uranium Energy Corp, a down day today. If we get a pullback and a retest of the lower band of support, we may open up a position. I wouldn't go buying just yet, though. MDU Resources broke out on a daily basis today. It did not break out yet on a weekly basis. So the jury's out on MDU. I would like to buy it, but with the market under pressure, I'm concerned. The fact that it did rally and, in fact, broke out today is a good thing. It showed relative strength. Is that a signal that the resource plays are going to outperform? Maybe. Verizon weekly chart, a down day today. We did tap the upper band of resistance. We did put in a new weekly high, but we pulled back off of that high. So it remains a watch. Marathon Oil, breakout point failure today, meaning it broke out on Friday, and today it collapsed back down into its trading range. In all probability, we're going to come back down and retest this lower band of support. So avoid Marathon Oil right now. Stokes are below 50. Avoid. I think we're going lower here. And that is it for this evening, folks. Everybody have a great night, and I will talk to you tomorrow. Be well.